All right, great. Thank you, David. Thank you for having me on. I'm Zach Manis with Stockwaves, a part of ElliottWaveTrader.net. Garrett and I, in addition to running Stockwaves, also run the Metals Mining and Agriculture service. It's kind of a sister service to Stockwaves, but focuses just on those precious metals, mining stocks, and some commodities. Was asked to come here today and talk about some of our favorite indicators. But before I jump into that, we are an Elliott Wave site. We have a couple of other analysts that focus on some other things, the Bayesian things and some other stuff that is not Elliott Wave, but most of the analysis on our site is coming from the standpoint of an Elliott Wave framework. So I have a few slides that I wanted to go over just as a very basic grounding in what we're looking at when we look at Elliott Wave. And then I'll talk about, when we talk about the other indicators, how we're using those in conjunction with that Elliott Wave framework. So at the very basics, and forgive me if some of you guys are more familiar with this, but want everybody to at least have a little bit of a working knowledge of where we're coming from. So the basics, we have wave structure that divides into motive waves, which advance a pattern. Usually those are 5-wave moves, and then corrective waves, which retrace that 5-wave move. Elliott wave also is very fractal. So this entire 1, 2, 3, 4, 5 and ABC structure could be the wave 1 and wave 2 of a larger structure. Or the same thing inside this wave 3, you can see there's 1, 2, 3, 4, and 5 waves. Inside this wave 4, you can see that there's an ABC. So that's important to know that it's fractal in nature. So the same patterns are unfolding at different degrees as subwave structures or as larger segments of a bigger whole, and that things go advanced and then there's a retracement. We can further divide that motive wave structure into impulses and diagonals. Impulses are much more strong, trending, powerful moves. There's not going to be any overlap. The subwaves of 1, 3, and 5 are all going to be 5-wave moves themselves, and you're not going to get any overlap of the wave 4 into wave 1 territory. Whereas a diagonal, all 5 of the subwave structures, including waves 2 and 4, but also 1, 3, and 5, are all going to be ABC moves. And you can have the wave 4 overlap with the top of wave 1, which is not allowed in an impulse. The other thing that we do is called Fibonacci pinball. And I think this is the biggest advancement that ElliottWaveTrader.net's founder, Avi Gilbert, brought to the world of Elliott Wave, was his understanding of how the subwaves work based on the Fibonacci extension tool. So R.N. Elliott talked about the Fibonacci extension, and that was expanded upon by Frost and Prechter in their book, Elliott Wave Principle. Often talked about wave 3s tending towards the 1382 or the 161.8% fib extensions. What Avi noticed with huge regularity was that the subwave 1 inside that wave 3 would often tend towards either the 382, the 50, or the 618 extension. Then after normal consolidation for the wave 2, the wave 3 would go to either the 100% or the 1236. Then after normal guideline consolidation for the wave 4, the 5th wave of wave 3 would go to that 1382 or the 618, 1618. This part of it, though, is something that we can really set our clocks by. And we know that if we get something that is not a 5-wave move up into this targeted zone as wave 1, then something else is more likely playing out, whether that is a C wave that might only be getting to a measured move without a clean consolidation as a wave 2, or possibly the whole structure morphing into that diagonal where it gets an ABC up as a more muted third instead of a 5-wave move, even if this looked better as a 5-wave move itself. So we use that as we look for agreement at those smaller degrees. We're using that Fibonacci pinball path to make sure that we're on the right page. We also, as we said, mentioned that things are fractal. we try and pay a lot of attention, at least some of us on the site, to using the preferred nomenclature and making sure that there's proper agreement at all degrees. So you'll have a lot of times that people will just look at the larger degree structure and say, well, that looks like a five-wave move, and then that looks like a five-wave move, but then they'll have some overlap or something else, or that inside this won't be a clean five-wave structure as well. So we're really looking down and zooming in at multiple different levels to make sure that we're balancing the equation, that we have the proper number of subwaves on either side, especially if it's an impulse, to make sure that works and is kosher. We have a lot of other educational materials that are available for free at the ElliottWaveTrader.net. You can scan this QR code, it'll take you there. Lots more stuff on Elliott Wave. That wasn't what the crux of this presentation was supposed to be about, but just wanted to give that as a good point to branch off from. So before we get into the indicators, wanted to also take a brief moment to talk about a possible chart for larger context. So when we're looking at different moves within the equities market, it's important to look at the largest degree of all of the data that we have, going back to really back to the 1700s is when the 1790s, when the stock market first started in this country. But really looking back, at least back to the last prior significant drop, which was the Great Depression, that 1930s. That was when R.N. Elliott actually developed Elliott wave theory. And at the time, he identified that as a very significant bottom and was projecting from there a 70-year bull market. Now, we actually got some nice extension inside the primary wave of cycle wave 3 into the 1999-2000 high. And then have gotten nice extension in this side, this cycle degree wave 5, that has taken that to closer to a 100-year bull move as opposed to only a 70-year bull move. And we haven't broken any support yet and could continue to get further extension of this move. But it's important to recognize that there is some broader risk skew. And we've talked a lot in other presentations about how Elliott Wave's rules for alternation can make this possible supercycle degree wave 4 very, very different from the sharp, deep drop that we got in after the stock market crash in 1929 and into the Great Depression. One of the ways that could be, it could hold a much more shallow consolidation relative to the like 90% drawdown that we saw there. Also could get an expanded flat where the B wave actually makes a higher high than the top of the wave 3. But those are some discussions for a different presentation. Just wanted to introduce this in terms of how we're approaching any long setups with this overall risk skew in mind. And then also that we use this to sprinkle in a good amount of short setups when there is a good risk reward presented for that, because of the potential for some larger degree consolidation to be trying to rear its ugly head. Just a quick slide about Stockwaves. One of the things that we talk about that we do a lot in Stockwaves is our wave setups. That is where we are taking a snapshot of Elliott wave when something is coming into a very clear structure into an ideal fib support zone. So we do a very probability and practical application of the Elliott wave with very clearly laid out parameters of support, resistance, invalidation, and a target level, so that members can use those to structure trades with very good risk reward, and update those as they get to those resistance levels and target levels. We also have a request tool so that members can put in a request to have any of anything from North American equities or sector ETFs that we cover in Stockwaves, or of course the mining service has that also, for us to do a more custom workup of what we see and post it for everybody. We do videos on Mondays, Tuesdays, and Wednesdays, and then on Thursdays we do a weekly webinar. the weekly webinar. Sometimes we're doing a sector review every couple of weeks, but often we're drilling down into a single sector, looking at the ETF, looking at some of the key component names, and seeing where things might be different and what we can expect in the weeks or months ahead. And then occasionally we do special sector updates as well. And then we also look at things that are potentially set up to use earnings as a catalyst to accelerate their wave counts. So the first indicators that I wanted to talk about with you guys today is the PSAR. That stands for Parabolic Stop and Reverse. But I like to call it the parabolic support and resistance because stop and reverse sounds a little ridiculous. And I think that it's more practical as looking at something that helps you identify changes in trends or where the momentum it needs to hold to be preserved. And so think of it in more in terms of support and resistance. And so it's illustrated by a series of dots. I usually don't have the line connecting them. And when price moves through the dots that are on one side of price, then it flips the dots to the other end. So this moving up through the top dots here prints a bottom dot, and then that would mean that trend has flipped, at least temporarily, into the bullish side. So it is more of a tool to use for some added confirmation. It is not in and of itself usually very predictive at any given degree unless you start zooming in, and you can use it at smaller degrees as well. I tend to mostly use it for the larger degrees and use it in conjunction with Elliott wave. So it was developed by J. Wells Wilder Jr. As I said, I think it's best for larger time frames. Usually I'm going to look at a daily and maybe a 3-day and sometimes drop down to a 4-hour. And then if I'm really looking to see where some key pivot points are, I might zoom in and look at a 2-hour, a 1-hour, or maybe even a smaller time frame. But for those smaller time frame charts, I tend to focus a lot more on the smaller degree, smaller time frame Elliott wave structure and some other indicators that I might get into. So as I said, it provides more confirmation of a trend or of the pivoting into that trend, but it is not a leading indicator or a predictive indicator. Usually the turn is going to have already happened, and it's going to start to be an added tool for confirmation rather than something that tells you where the bottom is likely to be. For that, we use Elliott wave and some other things. So also, one of the things that I've noticed over time using it, rarely are the dots, at least at the larger time frames, solitary. Usually at 4 hours and daily and above, those are going, if you get a pivot to a different, whether it's top dots or to bottom dots, it's going to be a series of usually 3 or more on the low end, and usually it lasts for a while. That doesn't mean that price continues to trend in that same direction once it flips, but usually it's going to take a while before it flips back. So as you can see here in this example, it flipped price, whatever time frame bar this is. I got this from EBC. So when it flips, the candle flips price here to the bottom dot structure because it broke over, even though the candle didn't close, and dropped down to bottom dots. So it only got one more candle above as a bullish candle and then started to retrace from there. But it held those line during the retracement, and that entire time it printed more of those bottom dots at that same time frame. And then once it broke, then it's that part of the trend ended, at least at that degree. And so then I said, is if you zoom in and were to start looking at the Elliott wave structure here and saying, okay, I think we have the makings of a possible bottom. If you drop down to a smaller time frame for the PSAR, you might see smaller dots here, a flip to bottom dots right here, and then more dots that are tighter here. And so maybe one of these candles was going to be the pivot point at, say, the 4-hour to flip to those bottom dots and show you the change of the trend. I'm not going to talk much about the math that goes into calculating it. I did print out the settings that I use in Motive Wave. So the initial AF signal is at 0.02, the max AF signal is at 0.2, and then the step also at 0.02. So those are the settings that I use for that. So just some examples in actual usage. Here's a good chart from back in January 2023, looking at the ES Mini S&P futures. So we had a three-wave structure to the upside, labeled here as an A wave, and a corrective consolidation. It actually made a slightly higher high as the B wave inside the B wave, but came into the ideal fib support region that we look for. When I zoomed in at the hourly, could see 5 waves down inside that C wave. So we had high probability that we were bottoming here in a B wave, and then noted when using this daily chart and the PSARs that we had just printed 2 bottom dots, that we got the flip and then we started to print there. So I was looking for more of a wave 1 to fill out, then get a consolidation as wave 2, and then fill out the rest of that C wave up into the 4400s. So here's a zoom in of that same time period again and what actually played out. So we did continue to fill out an even bigger wave 1, but then a deep wave 2. But continued to print those same daily bottom PSAR dots all the way up for the rest of that wave 1. Then got a nice 3-wave retrace, even though it was kind of deep for the wave 2. And then can see how we continue to fill out on up actually towards the 4600. And that ended up actually being a larger A wave of an even bigger fifth. Here is a morning update from the Metals Mining and Agriculture Service. This was from back in October 2023, highlighting here that I included not just a daily of the gold chart. This is the continuous gold back adjusted futures. I had to start using the back adjusted now that we're in such a higher interest rate environment, that every time the futures contract would roll, it would put a pretty significant gap that would sometimes started to affect and skew the Elliott wave count. The back adjusted continuous contracts have some of their own issues. So I also keep track of price on instruments like either the spot or one of the ETFs where they don't have the same issue with futures contracts rolling. But that's a different issue. So instead of only including just the daily to show the bottom dots that were starting to accrue on this gold chart, also highlighted and showed a 3-day, which I'll show on the next slide, as well as larger timeframes on GDX as well. So we were starting to get some nice confirmation of a pretty significant bottom in gold and in the miners back then in October 2023. Here are those other charts. Here's the 3-day on gold that had just printed a bottom dot, which is a pretty significant shift, especially when you have a nice move up for wave 1 and then the clear top dots. And then a bottom dot for the B wave bounce, and then more top dots for that A, B, C consolidation. And then that print there up through the resistance is the first initial big degree confirmation that you're starting to get a more significant swing starting to much, much higher highs. 3-day chart for GDX showing something similar. The corrective structure completed with that print of the 3-day bottom dot, looking for the start of a pretty big swing to the upside. And then GDX on the 1 week had not closed the week yet. So it was not going to, so it didn't print the bottom blue dot yet, but we were up through the top dots with the move when at the time of posting that in back in October 2023, that it was going to be printing because we exceeded that dot, the top dot. So we were going to get at least one of the blue dots. And as we said, probably they don't come just a single dot. So here's that gold chart, how it filled out off of that same October low, continued to print more of the bottom dots, and then a little consolidation, and then another move up, and then held our nice wave 2, and then continued to fill out all the way up to our wave 3 that could even get further extension, although we would like to see more of a possible start to a consolidation as a wave 4 from here in gold. Here's a look at the more current chart on the GDX. I actually hadn't looked at this particular tab that has the PSAR on it in a while. I have actually shifted to the purple alternate here that is more my primary. But it's interesting because this wave 4 dropped a little bit deeper than I was comfortable with, even though it did not invalidate as the wave 4 inside of the wave 3. Inside this C wave up. So shifted gears a little bit, but it was interesting when I pulled up this chart that it was actually still plugging along just fine in that wave count as well, but still getting mostly to the target region. We hit the 1382 extension for that wave 3 that we were looking for off of the lows back there from October, and could continue to extend towards the 1618 fib in that same wave count. This came up when I was just hunting for good posts from the rooms to illustrate the PSAR dots and the flips. Here's one where I was joking about that they don't usually come as solitary units. So use that quote from Star Wars of old Ben, but here we have that dot from this is from back in July 2023 for the start of that move higher in gold. So another indicator that I wanted to talk about that you might have already seen on some of those charts, because I kind of used it in tandem with the PSAR, is the iClouds or the Ichimoku clouds. It's not the easiest thing to say, so I just call them iClouds. It sounds kind of like an Apple product. And these are another tool that is similar. It's another type of trend or momentum or support and resistance indicator, but it has a component to it that is shifted forward by an interval that's related to the moving averages and the time frames that it does to calculate the similar thing that the PSAR does. But it shifts some of those trend lines or momentum lines forward and creates these cloud structures. And those cloud structures, I also use them mostly as support and resistance levels, not necessarily as pivots, although at some time frames they can function as a pivot. But it's another tool that I find is good for added confirmation along with the Elliott wave, not necessarily something that's predictive in its own right, but also works very nicely in conjunction with the PSAR. It's also kind of noisy, so I don't look at it all the time on every chart. So I have one of my tabs in MotiveWave is labeled iCloud, PSAR and iCloud. And so that's the tab where I don't put as much detail on the Elliott wave count, just the rougher sketch of the Elliott wave at a larger degree, and just look at that as seeing how that fits with the momentum that those two indicators are showing us. There's a lot more that you can read up on iClouds on Investopedia. There's probably lots of other tricks and things that people have used them for in the past that I don't use them for. As I said, I just like to use it in conjunction with the PSAR as another added layer of confirmation, mostly of support or resistance levels, to use it in conjunction with the Elliott wave. One of the things that I like to do is use it to project different support levels for the subwaves, maybe inside a bigger corrective structure. A lot of times where that initial A wave might hold is going to be resting right around part of the forward advance line of the cloud, which I'll show you some examples of shortly. Again, the settings can be pretty complex, but I keep it simple. The settings in your MotiveWave or whatever chart software you're using, these should be the defaults, a 9, a 26, and a 52. I don't know exactly where those numbers came from. I think some people have experimented, or maybe I did in TC 2000 years ago, with changing this to maybe an 8 and this to a 34 and this to whatever the next Fibonacci number would be. I'm blanking at the moment. But just to use Fibonacci numbers as opposed to 9, 26, and 52. I don't know where those came from, but those are the default. So if you want to replicate it, that's what I use. So here's another example of both of those being used together. Here we have a ES chart from back in March of 2021, where we had a fourth wave consolidation, dropped a little bit deeper than what we wanted to see as ideal for that degree. So there was the potential that it was an alt at the larger degree, 1 degree larger. But didn't invalidate anything and was holding nicely at the top of that green cloud. And then bouncing off of the cloud. So good confirmation that bullish support was holding, especially with just the wicks there being inside the cloud and the bodies of the candles holding above it. Again, using these mostly the larger time frame and zooming into the more specific Elliott wave structure on the smaller time frames, but not using that with these features. So we have two PSAR dots and the way that held support in the cloud as more confirmation of the bullish trend being ready to continue. And continue it did from that March low, which we did go ahead, even though it was lower than ideal, kept it at that smaller degree, wave 4, then got our 5 waves up for the 5th wave of the slightly larger degree, wave 3, then got another shallow consolidation back to the cloud support as the next wave 4, and then another 5 wave move up for the larger degree wave 3, the 5th wave of that wave 3, and then a nice corrective consolidation. This one dipping a little bit under the cloud, which is something that you should take note of. And then another 5 wave move up to the top of that larger intermediate degree wave 3. And at that point, we had one little movement here inside the cloud that where it's turned red. So that's something that I've taken note of, that sometimes that can be an early warning that you're in the final move of a trend at that degree. Once you start to show some of the inversion in the cloud or the twisting, and then it dropped under the cloud pretty harshly and then came back up to test the underside of that. Now, instead of it being support, it now functioned as resistance and then continued to drop down. Then we flipped it again in this larger corrective bounce, but then drop back under it again as we filled out more of a larger degree wave 4. Oh, I added some animations here. So there's that first one, the second hit, then the third that came just a little bit below. So that was a warning that you were getting closer to the end. Then you have that inversion, and then you break under the cloud more emphatically and continued to fall from there. So here's a use showing that illustration where we say, looking for the potential start. We got a top dot on the daily in gold back here from early April, and a possible completed count for the wave 3. So this could have been starting the 4th wave from there, but we're looking for initial support in the 3000 region as the A wave, and then a decent bounce to be caught by that cloud. And we did catch support there as the A wave, and then got more than just a bounce and started to extend. Once it got a little bit more than ideal for the B wave, it then ended up flipping the PSAR again, which I think I have on the next slide. So we got that initial drop down to the 3000 region, started to get a B wave bounce, then got a little bit extra. Then it flipped the PSAR back to the bottom dots, and then that continued to get more extension into a higher high for that same wave 3. Then, as I said, we might actually finally be trying to start more of a 4th wave consolidation there, which is probably, I haven't switched it yet to my primary, but I'm leaning more towards it holding the 3000 region again as all of the wave 4 here, as opposed to needing another B wave and C wave down. Zooming out, this is a more recent chart on gold. Just when I was putting this together, thought this was very interesting to note. I mentioned that sometimes you have a false positive where you get a flip on the PSAR, and it doesn't necessarily mean that the trend continues from printing that. but it just means that it might take a while before it flips back the other way. So if we're looking for an A wave and a B wave and a C wave down for this to be all of that green wave four, or maybe an A wave and a B wave and then a bigger C wave down, this could continue to print bottom dots for a while and then flip and then get the end and then flip a couple more times in here on that larger 3-day. But this just barely brushed that resistance, got the pivot of the dot, but then promptly reversed. So that might have been a false trend change where it really isn't necessarily a trend change. Also, don't only limit it to looking at the broad market index or to gold. Also, occasionally look at individual charts. Here is a look back at Tesla from March. Had been dropping sharper than ideal. Wanted to really see the 300 region hold as support for this B wave, and we're starting to get a sharper extension of that move. But then looked at the 3-day iClouds, and obviously we were in a bearish trend for the 3-day coming off of that A wave high, but was right at the bottom of fibs of cloud support into the lower fib region. I think this was just under a 618 retrace, or maybe it did get a little bit more extension down to the 76.4, but looked good for trying to hold that low there. Did get nominally lower, but has ended up starting a nice move higher for that C wave off of the March and April lows. And right now, I wanted to look at this chart for, oh yeah. Oh, the next one is more recent. Okay, so showing this because we have an initial move up, which could count as our wave one, and this is the wave two, but we have to allow for a wider consolidation as wave two, or really the more ideal was to get a higher high as a better 1, 2, 3, 4, and a fifth wave up. But looking at the daily structure here, as well as the price action that we've gotten the last few days, looks much more like this is the wave one and the wave two, and we're trying to start the wave three of this C wave off of this low. And although the Elliott wave allows for a wider consolidation, because of where we're holding inside that cloud and the PSAR, it would really look pretty bad if we did drop down to retest the 270 region as a wider flat, at least in terms of the cloud and PSAR momentum. So here's a chart from yesterday on Tesla. We did get more of the retrace than we wanted to see, a little bit deeper, but did hold in the cloud for this smaller wave one and wave two off of the earlier low in July at a 764 retrace. So as long as that 299, 300 region holds that we hit today, it is still holding nicely in a constructive setup for heading higher in that C wave. Another indicator that I wanted to talk to you guys about today is my CAB PCR. I use this only on the S&P. It is a total market put call ratio. The CAB stands for Cow A Bunga. When I first started 15 years or so ago at Elliott Wave Trader, before Stockwaves was even a thing, I was anonymous on there because I was still under compliance for a broker-dealer. And I was just sharing some charts and participating in the discussion, and went by the name of Cow Abunga. So I have Homer here surfing on the wave. But this is different than a standard put call ratio that looks at the numbers of puts versus the numbers of calls. There are hundreds of thousands, if not millions, of options that are nearly worthless at any given time, and many of them expire worthless. The put call ratio that I created here tweaks that and looks at the relative dollar value between the puts and the calls and makes that into a ratio. So sometimes it aligns with the standard put call ratio that some people track in the market, and other times it actually gives a pretty different view. A couple of things about it. So, with anything like this that functions like an oscillator, it's best to identify extreme regions for that oscillator and then treat it somewhat like a stochastics or a MACD or an RSI or something of the like. So with mine, most of the time I identified the 2.0 region and the 0.3 region as the extreme bands, with sometimes going out into the 3 or mid 3 region as more outlier events. It is also much better at identifying extremes for price bottoming than it is for tops. Things can often get far more extreme when you're talking about bullish extension than when you're talking about bearish structure. This was a look back at a chart posted from April 4th, just a couple months ago. So said that most things were due for a little bit of a bounce, but we weren't yet weren't yet clearly bottoming yet. According to Elliott wave, it looked like it needed a fourth and a fifth of this C wave down. But we were hitting some pretty extreme levels for the put call ratio. It was actually getting close to the 4.0 level, which is a pretty outlier event, which we'll talk about in just a minute, but not quite as a bottom. And you could look at that as possible, if you get like price divergence where you get a lower low in price, but you don't get a higher high in the indicator, that could be a nice indication of some divergence that you might look at similar to some other oscillators. So here is a post from just a few days later, showing that we got over the 4.0 level when we got that bounce and then a lower low. And then we're starting to put in a pretty nice reversal candle as well, off of that April 7th low. So I also highlighted a couple of other times where at this on the 6-hour chart, which sometimes because of the way Motive Wave creates the indicator, because it's a custom indicator, sometimes there's a little bit of math discrepancy when you switch between different time frames. Most of the time I look at it on the 6-hour just because that gives me a pretty wide view of market action that I can do some comparisons to. Occasionally I'll zoom out to a daily or maybe zoom a little bit into a 4-hour. Sometimes that changes the calculation just a little bit. But one of the I highlighted here that the last time or the previous times that it had gotten over 4.0 in the more recent past were April 2022, which was in the middle of the Y wave bottom inside the WXYZ for the larger intermediate degree wave 4. That was the bottom back here. June 2022, it hit 3.99, closer to the bottom of a Y wave. And then March 2020, the COVID, well before the COVID bottom, it hit a pretty significant price extreme over 4, and also October 2018. So a lot of other times it's hit into the high 3s on the 6-hour, but hitting 4 was a pretty outlier event. And we had a really nice ABC structure into a couple of other indicators for support in Elliott wave structure, setting up for at least a significant bounce, if not a fifth wave up to another high. So this is looking back at September 2022. We ended up getting a lower low from here, but this was one of those other opportunities, or one of the other times, at least on the 4-hour chart, where it hit a pretty high price extreme of 437. And the fear and greed also noted hit 16. And the regular CBOE price PCR hit 1.02. And then highlighting that the last time it was over that level on the 4 hour was March of 2020. So this was looking to be a pretty significant potential bottom forming. So after that April 7th bottom, on that same April 7th day, I mentioned that sometimes we do special updates, because I'm going to go back up real quick to that slide. I don't know why that other one got put in there. So I said we were looking for at least a significant bounce, if not the potential for a move to significantly higher highs over those from earlier in February and March, as another wave 5. So we posted a special update with 2 big lists in it, and then did a webinar the next day to go over all of these charts in more detail, and added a couple more to each of the lists. I think we ended up with something like 70 names. And some of those were sectors as a whole, and then individual names that we highlighted within the sectors. But we broke it up into 2 different types of lists. One were things that had made a stronger argument for being more significant bottoms that projected them to move out into higher highs. Some of them more in conjunction on the same time frame as that green 5th wave that we were looking at on the broad market a minute ago. But some of these at a larger degree where they might only get the first leg of a bigger move in conjunction with that same bounce. And then the second list was things that might be turning into short potentials, but were due for pretty significant bounces first. And one of the things that I mentioned a lot about a number of these names in that second list was a lot of those had potential to be significantly higher percentage moves off of those April 7th lows, for even if it turned out to only be a corrective bounce, then some of the things in the top of the list that might only get that first leg of a significant bottom. So that's kind of how we were using that, even though there was a chance that we were only going to get that corrective bounce was still substantial. And it was a significant enough outlier event of getting such a high reading on the put call ratio, even though it did look like we were potentially forming a more significant top and we're only going to get a corrective bounce from there. We were clearly due for a very substantial bounce. So it was worthwhile to look for the strongest opportunities to play that to the upside. So fast forward to today, or actually yesterday when I was making the slides, and we have filled out more than what would be reliable for that bounce, particularly because at least the S&P has made actual higher highs. RSP hasn't. A number of things haven't yet. A number of things can also be a B wave of a wider flat and then get more extension higher. And B waves of flat structures can make higher highs as expanded flats. Here, it would be in the start of a bigger corrective move, as we talked about in that larger degree slide from Garrett at the very beginning, that huge zoom out of the S&P. That shouldn't start with a B wave making a higher high. So we're more probably in the 5th wave extension. There's some risk. I talked about this in a presentation about sector rotation the other day. Actually might have been yesterday, it's blurring together a little bit, that there are some sectors that have made a little bit more significant of a higher high over this green wave 3. So they are at risk of actually counting as all of the 5th wave. But most things look like they should hold a B wave into support and then get another nice swing wave move up into, here on the S&P, it would be into the 6,800 to 7,000 region, provided we hold support in right around the 5,400s, would be the most ideal. We can talk about that another point. I said also that it's much better at being predictive of more significant bottoms, but we are hitting the extreme region for potentially at least some kind of a local top, leading to some consolidation in the short term. So we still have some time. I do want to leave some time for a few other questions, but wanted to talk about a few other indicators that I use. Again, first and foremost, we're always looking at the Elliott wave structure. But one of the things that I learned from, I think it was Carolyn, the Fibonacci queen, when she joined our site, She uses the 8 and 34 exponential moving average cross. Um, I don't know if she uses, yeah, I think she uses 8 and 34 because that's not the standard values. I think it might be like 9 and 26 or 9 and 22. Um, I don't know if she did it as 8 and 34, or if maybe I suggested trying it with Fibonacci numbers. But really like the way that that works in terms of providing some signal changes at smaller time frames. So here's a 30-minute chart on Tesla, and this is that 834 cross. You have the 34 is the blue line. The 8 sticks with price much more closely, the 8 MA. And when that crosses, I have this to signal little green and red triangles. It can be a nice signal as a short-term pivot, particularly if you have support holding for Elliott wave structure, to be showing you that things might be due for a turn up. So here we had a B wave holding support, little green triangle here. So it says, okay, maybe we are trying to turn. Some consolidative structure there, down, up, down, and then another green triangle there showing that flip. And that was holding as a 1-2 start to a C wave, or to wave one of a bigger wave one in the C wave, and got a nice 3, 4, and 5 out of it. So that's one way of using that structure. That's in a 30-minute. Zooming in even more, you can use it where I have it adjusted where it changes based on the time frame. So this is based on a 3-minute chart, this is the 834 period exponential moving average. So filling out more of that wider flat for the deeper flat for the wave two. We dropped deeper today, closer to the 300. That was 299 and change. The 764, that is still a reliable fib. It's not the ideal fib, but got more extension out of that 4 and 5 for the possible micro degree wave two, but trying to reverse off of there so far today. Also, wanted to talk, I know you probably saw in a lot of my charts, all of my charts pretty much have the same MACD, RSI, and stochastics on them. I don't focus on those so much, but again, in conjunction with Elliott wave, we have a nice 5-wave move up, a 3-wave retrace to the 764 fib, as we mentioned on Tesla, and getting some curling up here on all 3 of those. So on the next page, put the settings on my MACD. I also changed that to some Fibonacci numbers instead of the standard settings. So period 1, 13, period 2, 34, and then a signal period of 8. On the stochastics, those I use 12, 3, and 5 for those settings. Another sentiment indicator that I use that is not really very quantifiable, but Elliott wave is based on sentiment. So I post a lot in our site. It's a forum. We have thousands of members that are engaging with us on a daily basis, and we get replies to things that we post, whether wave counts and other stuff like that. I also share a lot of stuff on X and get some interesting replies there too. So when people have very bearish views or very overly bullish views, or very argumentative of whatever my views happen to be, I usually look at that as another potential indicator. So this was just from the other day or earlier today that I had Gregor telling me that it'll be a miracle if Tesla goes to 400s in the next month. And that if this was a wave two, it should have been a V bounce and reversed much stronger. And that fundamentals matter, and that cash reserves are down 89%, even though a lot of that spending was on new robotics and other AI stuff. But no way that it's going over 390 anytime soon. And then people starting to panic and say, if it doesn't hold the 764 retrace, what's the alternate count? Even though a Fibonacci level is a good guideline, and sometimes they hold pretty exact, and we look at them, but they aren't necessarily meant to be exact levels. And certainly a Fibonacci retrace level, whether it's the 382, the 50%, the 618, or the 76.4, or even the 78.6, are not themselves invalidation levels. They're levels that are high probability regions to hold, but that doesn't, just because it doesn't hold, that doesn't automatically force things to shift into invalidation. And then somebody saying that sentiment's so poor right now that there's no catalyst on the horizon, so they don't know what's going to make the stock bounce. So anyway, using those sentiment indicators in terms of people's actual emotional outbursts, whether it's in public or on our site. Another indicator that I like a lot, and I think this is the last thing I have to talk about, and then we'll leave a few minutes for some questions, are the fast graphs that Lynn Alden introduced us to. Lynn Alden joined Stockwaves a while back, a little bit, I think shortly prior to COVID, and we've really, really enjoyed working with her. Garrett and I are not fundamental analysts. We approach everything through the lens of Elliott wave. But we were drawn to the fundamental analysis that Lynn was doing, a lot of it because it seemed to align with some things that seemed to be a little bit more counter trend to what we were seeing at the time in our Stockwaves charts. And it has been a very happy marriage. And she posts a lot of updates of a series that she tries to do one or two a week of where fundamentals meet technicals, taking some of our charts and then putting it together with some things that she sees from the fundamental side. And one of those things that she introduced us to were these fast graphs, which are mostly like fundamental metrics, but in a graph form meshed with price, which kind of shows things as being either overvalued or undervalued based on what seems pretty normal, either for its historical averages or the sector as a whole. And we like to use that a lot. So when things are down in the green shaded region, that can be a good potential value play, particularly when there's a bullish Elliott wave chart that allows for that as well. So one of those things recently that she talked about was PayPal, that we like a lot, particularly if we can get a nice corrective retrace here pretty soon. A couple other ones that she shared recently. Copa, very, very undervalued based on the metrics in the fast graph, and we have a really nice bullish potential count on that as well. And then Walmart, very, very overvalued. Along with Costco, we're actually short Costco at the moment in our wave setups table, and that trade has been working out pretty nicely so far. Here is another good example of using that in conjunction. Lynn put out a special update on April 13th, including charts from Garrett and I of AMD coming into support for a bigger move down. We had actually been short AMD from October, looking for the move down, but had just tightened up these support and validation levels for that trade because it had reached our targets. And she was looking at it also bottoming as well. So then on April 22nd, we posted one of our wave setups. I said again, those are going to include a chart, a blurb about what we see in the chart, and then clear parameters saying whether it's a long or a short, where support is, where invalidation level is, where the first resistance level is, and where the target is, and then the time frame and a ranking. So we were looking up into the 130 region as a bigger ABC bounce after getting the move to fill out to the downside. And so that worked really, really nicely in conjunction with the undervalued, or at least temporarily undervaluedness that she was seeing in AMD. I think it actually has hit about 150 so far, and definitely looks like it is all of this B wave completing, because that was the 618 retrace. I think that is all of the slides that I prepared to share, David. I do have my MotiveWave software open, and can also just open up a chart and answer any questions that there might be.
Yeah, you have a few more minutes. So, yeah, someone just asked about PayPal. But if anyone else has any symbols, I guess Zach will can look at them, right?
trying to figure out how I can move to a chart to switch to that screen. I think maybe I have to exit the PowerPoint. Oh, here we go. There we go. I should be able to choose the different screen to share. So on PayPal, again, looking for a bigger C wave up. We have nice structure off of that April low that could easily count as 5 waves up or is just an extension of that ABC. But looking for a wave two retrace into the 60s to set up the next legs of that move. No other questions? Guess I didn't have to talk
Oh,
quite that fast.
are you able to see the chat? Um,
I
let's see.
Oh, here we go. There's the chat.
Um,
How many hours does it take a seasoned trader that never used Elliott waves to learn to trade with Elliott wave? Um, yes, PayPal is bullish. Just talked about that. Um, I don't know. I was reluctant to read the book that Avi was trying to tell me to read the book initially. I started working in the retirement planning business and insurance and investments back in 2007 and 2008 when I got out of the mortgage business. And Avi kept telling me to read this book, read this book. And I said, no, no, no. MetLife has this asset allocation questionnaire. It's 10 questions, determines whether somebody should be 80-20 stocks and bonds or maybe 60-40. He's like, Zach, that was written by attorneys who just want plausible deniability when something bad happens in the market. I said, no, 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 that wouldn't be the case. So I finally read the book and it just clicked. It made a lot of sense, how things move, the patterns. I could see it in the charts and it clicked for me. It took, I mean, I'm still honing my skills, I think. Right now I am pretty good at being able to look at a chart and eyeball where that ideal fib support region is going to be and put some wave structure on without kind of zooming in and measuring subwaves. But always looking to try and see what other nuances can I teach myself and can I learn from when things didn't follow through the way that I thought that they would. So I've been doing it for 15 years or so. So um, definitely that's like a 10,000 hour thing, but for some people it seems to click right away and they understand it and they get it and are able to at least use our wave counts and trade very effectively based off of it. And I think it's important to understand, at least have a basic understanding of the charts that we're presenting before you're using them to place trades, and because we're not just spoon feeding you entries and exits. But in terms of mastery to apply your own counts, some people get it and they start sharing that in the rooms and they help us out. And we've elevated some of those people to assistant analysts and other people have been there for years and still don't quite seem to get it. But they're able to still use our charts and trade effectively. There's a request to look at Netflix. Netflix, pretty long-term bullish, should still have a lot of more to go higher up towards the 2000s and maybe even up towards 2800 in a cycle degree wave 5 off of the 2022 low. But that counts best as a diagonal structure that easily counts complete in the C wave of wave 3 of the diagonal. Possible to make this 3 wave here and this the wave 4 and this is an A. Maybe it holds the 1000 region as a B wave and then gets a C wave up into the 1500 region for an extension of this wave 3, but would then still be due for the larger degree wave 4 after that. So not the best risk skew right now on Netflix. You can find me. I think David just posted the link at elliottwithtrader.net. Again, earlier we had the slide, the QR code that took you to the free resources there for Elliott Wave intro stuff. And you can also find me on Twitter or X at ZACMANNES.